Wednesday, November 21st, 2018, Monaco 64, home of alternative economics and contrarian views. This morning I want to talk about optionsellers.com, the firm that just went bust, and the lessons that one needs to learn, not just about trading options, but about investments in general, in my opinion. Many of you know I was a futures and options broker for 20 years or so in the city of London. So this is very interesting, and it's also interesting because I spoke about options a few days ago. And that story maybe had just come out, but I hadn't seen it. So I'll go through what I think happened at optionsellers.com. And talk about the lessons people need to know about not just options but derivatives and other things in general. Before that, of course, I'll look at what the markets are doing this morning. It's just before 8 a.m. London. Yesterday, of course, we had another down day for the stock market. The Dow finished 551.8 points lower, or 2.2%. S&P finished down 49 points, or 1.8%. And the NASDAQ actually outperformed the other indices. It finished down 1.7%, or 120 points. Is that a light at the end of the tunnel? I'm not sure. We'll have a look in a minute here at the charts while I look at the prices this morning. So as I said, just before 8 a.m., precious metals, gold has been holding like a rock. It's not really going anywhere. It's holding firm here. Yesterday it tried to rally earlier on towards 1226 or 7 or thereabouts, and then it came off. But we're still at 1223 here, up $1.50. Range has been 1220 to 1224. So very narrow range. Silver is up 8 at 1439. Range has been 1427 to 1442. Silver got caught in the current of selling yesterday. Commodities also got hammered. Crude oil, especially the stock market. So as we know, silver is a monetary commodity and an industrial one, so it got caught in those currents. The Dow this morning is actually a little higher. It's up just under 0.5%, or 114 points at 24,567. S&P right now is up 14.5 points, or just over 0.5% at 2655. NASDAQ 100 future, that's up 0.84%, or up 55 points at 6580. Currencies, pound is a little stronger, a tad stronger, 11 pips. It's at 127.97. Euro is up 0.16% at 113.88. Dollar is up 0.1% against the yen, 112.87. So currency is really not moving that much. Dollar yuan is down 0.1% at 693.75. And crude oil, I think, got down to WTI. Let's see here. It got down to a 52 handle yesterday. Right now we're at 54.34. So it has rebounded this morning. It's up almost $1 and 1.7%. Brent crude is up almost $1 as well, or 1.5% at 63.58. And natural gas is up again 5.5%. 477, and we'll be talking about that a little later in option sellers. Apparently that was their problem. They were exposed to natural gas futures, and that couldn't have been pretty, or it wasn't pretty at all. What about the bond market? Well, the 10-year yield right now, it's at 308, so it's actually still fairly elevated. It's up 2 basis points, so I think it's going to be tough to get back below 3 unless there's like a complete meltdown of the stock market in the next few days. Of course, tomorrow is a holiday in the States, so things should quieten down. But I think Friday the market reopens, even though it's the Friday after Thanksgiving. The Italian market as well, bond market, that's not looking great. But this morning we've seen a little bit of, you know, drop back in the yield. It's at 352, Italian yield, so down 10 basis points. Still the ongoing saga between Italy and the EU and their budget. So optionsellers.com. Well, what's happened to this fund? Well, institutional investor says he blew up his fund. Now he's a laughing stock. And he even made a video on YouTube, this guy, to his clients. Now put it up in the cards and in the link below. So what do the institutional investors say? Well, they say investors and traders thought the video was parody at first. Real Talk said, between the domain name, headlines, and the fact that the he released via YouTube, I thought this was a joke, tweeted Christy Hamilton, a portfolio manager for Children's Health in Dallas, Texas, late last Friday. In the video, the head of optionsellers.com, a commodity trading advisor, sits at a boardroom table in a suit and tie wearing cufflinks and a Rolex resembling watch. And I quote here, needless to say, the events of this past week have been incredibly devastating for our clients, firm founder James Cordier told the camera in his 10-minute apology video posted November 6th. To my client in Marseille, my wife and I were certainly looking forward to joining you in the French Riviera. It sounded so beautiful. So it goes on to say optionsellers.com managed money for 290 individuals, the video said, and specialize in its namesake technique of selling options to produce income. And this is what Zero Hedge also says here. They point out to the letter he wrote to his clients. And this is what he said. This is the interesting part, because option sellers, not only did they lose all their clients' funds, but their clients are on the hook for even more. And you might think, how can that be? Well, that's because of derivatives, and I'll come up, I'll explain it to you in a minute how that works with options. So it says here, your account could potentially be facing a debit balance as of tomorrow. Optionsellers.com will be processing fee credits over the course of the coming days to help alleviate debit balances. What these will be determined after all positions are closed. This has in effect crippled the firm at this point. Our brokers at FC Stone have been assisting us in liquidation. So, and it goes on to say, what do I do about this debit balance? Well, and then he answers, you likely received the debit call notice from FC Stone this morning via email. You may receive it in the mail as well. This is a call to add funds to bring the balance back up to zero. And it goes on to say, what happens if I don't pay the balance? Well, we recommend balances be paid. If it is not paid, it becomes like any other unpaid bill. So there you go. They've lost their all their money and more. So this is one of their ads here. It says, high net worth investor, are traditional investments not satisfying you? Question mark. And then, you know, it says here, one thing that is quite amazing, he says here, options can be a great alternative, but most make the mistake of buying them. Stock option sellers may think they have found an answer, but premiums can be small and margin requirements huge. Mostly will simply give up and settle for what they get. So these people, you know, if I had seen that advert as an options specialist, you know, expert as I was for 20 years, and how did I become an options expert? Well, through taking courses on options, through reading books. This book here I talked about the other day says options, futures, and other derivative securities. So what are the lessons from option sellers? Well, the first one for me is, especially if you are not a professional investor, if you're even, whatever you are, a high net worth individual, not a high net worth individual, if you don't understand what you're getting into, you need to do your homework and understand it. My analogy is, if you want to become fly a plane, you're going to take lessons and learn everything you need to, because it's very dangerous, of course, flying a plane. Of course, investment, there's no, lethal threat, but there is financial threat, which actually could be lethal to people, if they lose everything. Their mental health could break down, and they could die. So, if you're going to do all the hours to learn how to fly a plane, you should do all the hours to learn how to, what you're getting into. And that's why when I talk to my viewers and subscribers about anything, gold, silver, cryptocurrencies, I tell them what I think and what I do, but I always tell them that they need to do their homework and be sure before they get involved that they understand what they're doing. What's the second lesson? Well, show skepticism when people like option sellers and others tell you that they found something that will really help you, something that no one else is offering. Be skeptical. Third, do what you understand. It's a bit related to my first lesson. Stick to what you know. What about the fourth lesson? I think this is more for the system, in terms of the system that we're in, the financial system we're in, the fiat money system. This teaches us that, it's become so difficult for the average person, or even high net worth individual, to be able to deposit, get a return, a fair return on their money, that they need to resort to this kind of stuff, optionsellers.com and others, and derivatives. 50, 60, 70 years ago, or in the 19th century, if you'd worked for all your life and you'd saved your money, that money would still have purchasing power, and you could live off it comfortably because you had a fairly good income on it, and there's no inflation. So that's the fourth lesson. The fifth lesson is that if you're really gonna if you're gonna be in this business and you don't want to fail, you need to be a bullion bank or very tightly connected to the central banks, because this is what the bullion banks do. They're naked short tons and tons of gold and silver, but they've got nothing to worry about, or maybe they have in the future. The central banks have their backs, but no one had no one bailed these people out. So that's what you need to know. You need to, unless you are well connected, be wary of this. So now I want to look at options, because what this I would, I haven't seen the accounts of this firm, but I would bet that they've been, they say they've been selling options, calls and puts. My analogy to this strategy, and because we had a client, one of my colleagues had a client who used to do this every month. And I even talked to my colleague, this is quite risky, because this guy was usually fairly conservative. And I said, this could one day blow up in his face, what he's doing here. And my client said, my colleague said, yeah, I know, but we get the commission. Well, the analogy is that run onto the motorway or highway to pick up pennies when there's no traffic. There's no problem. There's pennies there. Let's go and run. Loads of pennies. But one day there's out of nowhere, this huge truck or lorry, as you say in the UK, comes and crushes you to death. That's the strategy of selling naked options. And what does it mean, naked options? Well, first, let's have a look at what the risk profile of options. So here's a long call risk profile. And the call, of course, I read about this the other day from this book. So what's a call? A call option gives the holder the right to buy the underlying asset by a certain date for a certain price. So you can see there, the price is on the vertical axis. The price of the option is on the vertical axis, and the price of the underlying is on the horizontal axis. So you've paid the premium there, that's the option price, and then the price has to go above X so that you start making money. And as you can see there, you can make as infinite amount of money because the price can go as high, there's no limit on the upside. So that's the risk profile of being long or buying a call, which is something this guy was saying that is a mistake, right? So you have to pay a premium for that. What's the risk in that? Well, that when the option expires, the price hasn't, the underlying asset hasn't gone through X, you lose the premium, but you know what you're losing. And then there's the opposite. When you short the call, and it just flips around, that risk profile. So you receive the premium there. But if the price goes through X, you have an unlimited amount of risk on the upside because, that underlying price could go through the roof, just like natural gas did recently here, as you can see, right? So back to the risk profile. What about a put? So here's what it says. A put. A put option gives the holder the right to sell the underlying asset by a certain date for a certain price. So the main difference here, as you can see, you're still paying the premium for the long put, and then the price has to drop through X. But your profit is limited because the price of the underlying can only go to zero, right? So actually, there's not as much upside in buying a put as there is in buying a call. And the same thing goes for being short a put. So you get the premium there, and if the price goes down through X, you start losing money there. Your profit goes down, but it's limited because the price of the underlying cannot go underneath zero. So what this option sellers were doing, it looks to me they were selling calls, also puts. You can sell both. You sell straddles and strangles. Straddles, you sell calls and puts of the same strike. Strangles, you sell calls and puts of different strikes, and you take in the premium. The risk is when you're naked short the call. And what does that mean? Well, when you're not naked short, for example, I'll give you a good example here with Apple stock. Right now, Apple stock yesterday closed at 177. So if you call your optionsellers.com fund, well, you won't be able to call them anymore. But if you call an options broker and you tell them, I want to sell 1,000 of the 200 calls in Apple, expiring, the third Friday of December. So that will give you, you're selling that. So you're issuing someone the right to buy Apple at $200 for they're paying you a premium and you're raking in that premium 1,000 times. But what does that mean? Well, most options for stocks are 100 times. One option's 100 shares. So if you sold 1,000 Apple calls, you actually, if you cover that position, if you're not naked short, that means you should have 100,000 Apple shares. So just in case, if Apple trades above 200, let's say 203, because you receive $3 or $3,000 in premium for selling that option. So if it trades through 203, then if you don't have the stock, you're going to be losing $1,000 for every dollar above 203. So so you might ask, why do the covered call selling? Well, because if you follow Apple stock closely and you think, oh, we're not going to get back above 200, and I think it's a good way of earning $3,000, I'm going to do it. And sometimes that happens. It goes up to 200, comes back down, and then on the third Friday of December, the Apple stock is at 190, and that option expires worthless. So you've raked in the $3,000. The option buyer lost $3,000. So, but in the naked short, you sell the 1,000 calls on Apple, but you don't have any stock. Let's say there's some big firm comes and puts a takeover bid on Apple, and the stock price goes to $350. You're completely screwed there, because let's say 203 to 150, that's 147 times 1,000. You've lost $147,000. And let's say you had $100,000 in your accounts. Well, you're going to be getting a debit balance, right? So that's what I think happened. These people, you can see the chart of natural gas. As I said, for the last 18 months, it's been between 2.5 and 3.5. And it looked like, easy money. But all of a sudden, we saw the huge spike. The truck came down the road and crushed everyone. A lot of damage. So hopefully, this will help. Do your homework, the most important lesson, and never trust people who say they can give you something that others can't. So if you enjoyed this video, please like, share it far and wide. Subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, and on Twitter. I wish you all a great day, and I'll talk to you later. Take care. Bye.